right, White Line Agents. Today we have Mr. Alex DeLeon so I'm going to get this wrong, Universal Recovery Consultants, basically credit repair. We're fixing up credit. We met him at one of our mixers that we just had down at Freetail Brewing. Guys, if you are not coming to the mixers, you need to be. If you're friends with a White Line agent that's not coming to those, you need to, because they're epic and awesome and a lot of fun. And I know Israel and I stayed there way later than we should have. I don't know how much trouble you got in, but I did. But we met Alex, and that's why we do these things, meet great people that do great things. And Alex is going to talk to us about credit repair, what's going on, because as I said in my emails, guys, everybody needs help with their credit. I don't know anybody with a perfect credit score. Number two is no credit equals no loan. And if you can't get a loan, 95% of house buyers need loans. You don't have a loan, that means you don't get paid a commission. And the other thing, guys, is I'm working on a loan right now. My credit score personally fluctuates right around 700, 720, 690, just because I have high usage, because I put all my stuff on credit cards and all that. But my credit score was at 694 when they just pulled something and it completely screwed up the numbers on a loan because it was below 700. And now I'm very interested to hear what Alex has to say. And I probably aired out too much of my dirty laundry. But Alex, tell us about yourself. How'd you get into this? What do you do? Like, explain this to us.
Yeah, no, I appreciate it, Colin. Thanks again for everybody being online. I do appreciate your time. I'll definitely try to give you as much valuable information as I can, and hopefully take some gold nuggets. But yeah, as Colin mentioned, my name's Alex. My wife and I are the owners of Universal Recovery Consultants. We are credit repair specialists. We've actually been in the credit repair industry for about 4 years now, but we recently decided to just branch out on our own and start our own company and take the plunge. We are actually one of the fastest growing credit repair companies right now in San Antonio. We've quickly built a reputation of being honest, upfront, and transparent, which is something that we've worked hard to build and worked harder to maintain. But we're sitting at about 160 clients right now. We've been very fortunate and blessed to just acquire great partnerships. And I mean, we love what we do. Our service, our attitude is all about service. Providing quality client service is a top priority for us. And I'll definitely get into that a little more later. But what I'd like to start off with first is some basic credit education. Unfortunately, when it comes to credit, there is a lot of misinformation out there. Most people, the information that they get, it's just passed down from generation to generation, and unfortunately, in a lot of cases, it's the wrong information. And unfortunately, there is a lot of myths about what credit is, what it isn't, how to maintain it, all that. So I'm definitely going to just try and debunk a lot of those myths and just give you a little bit of education on credit education and knowledge, just to make you a little more valuable to your clients, and also let you know how our services can help build your business and create a more robust pipeline. So let me go ahead and share my screen. Oh, all right. Let me know if everybody can see that.
Yes, we can. I can see it.
Yeah, I've got it.
Okay, perfect. Okay. All right, so just to give you, again, so this is just some basic credit education and ways that you can maximize your score. But first, when it comes to credit repair and credit in general, it's always good to know what credit is. Just because in order to increase your chances of getting approved or your client getting approved and getting the best rates possible, it's just good to be informed on number one, what makes up a credit score in the first place, because we've actually seen situations where individuals or families are ready to either purchase a home, buy a car, maybe even start a business, but their credit score doesn't allow them to, because again, it's a huge factor determining whether or not they'll be approved. Now, there are two things when it comes to your credit portfolio. Number one is the credit score and the credit report. Those are two entirely different entities. So with credit report, and are y'all seeing, do I have the right one up? Are y'all seeing the difference between credit score and credit report? Is that the one that's showing?
No, it just says restoring more than just your credit.
Oh, okay, sorry. I'm sorry, I put in the wrong one. Okay.
It's like it's showing your main page, but then it's showing all of your pages on the side. So it's expanding your main page
Oh,
on the whole
weird.
page, if that makes sense.
Okay, okay, hold on. Let's see, I'm not sure why. Okay. Okay, actually, you know what? Where's that? Okay. Okay, here we go. Sorry about that. Okay. All right, I see it loading. Okay, perfect. So again, when it comes to credit, there are two different things: your credit score and a credit report. Two entirely different entities when it comes to how your or what your credit consists of. So in some situations, you can have a great credit score, but there's negative items on your credit report that prevent you from getting a loan. And then just the opposite, you could have a fairly decent credit score, but an extremely clean credit report and get approved for the loan. Now, your credit report is an account or a detailed account of your credit history. It determines your financial reliability. And it could be used in a variety of situations, from getting a credit card to buying a house or even applying for a job. It's getting to that point now where credit is playing a role in almost every aspect of your life. From getting better interest rates, because if you do have a higher score, you will get a better rates on your insurance. And then, as I mentioned, in some cases, it can even prevent you from being approved or getting a job. Now, your credit score is a measure of your credit worthiness. It's a 3-digit number that lenders use to help them decide whether you get a mortgage, a credit card, or some other line of credit. And again, that can play a factor in your insurance as well. The credit score is a picture of you as a credit. How much of a credit risk are you to the lender at the time of your application? So again, a credit report determines your financial reliability. It's an account of your credit history, and then your credit score determines your credit worthiness. So how reliable are you as a candidate, and will you be able to pay that loan back on time and in full? Now, when it comes to your credit score, there are two different scores that are most widely used: your Vantage scores and your FICO scores. So you definitely want to be very careful as to which score you're going off of. Now, when it comes to things like Credit Karma and even some banking apps, you want to be very careful, because most of those utilize Vantage scores. Vantage scores are not your actual FICO score. They're both different types of credit scoring models, and they both consist of a 3-digit number, but it's a prediction of the consumer's ability to repay back a debt. Now, the FICO model, which stands for the Fair Isaac Corporation, was introduced back in 1989. That's the one that's used by 90% of your lenders. And I believe when it comes to mortgages and things like that, most mortgage lenders utilize FICOs 3, 4, and 5. And of course, if you're applying for an auto loan, they use another FICO scoring model. There are actually 16 different FICO scoring models. So it all depends on what you're applying for. Now, the Vantage score wasn't introduced until 2006. That was developed by the credit bureaus. It's not the most widely used, but it is gaining popularity. Now, just to kind of give you an example of the difference. So with Vantage scores, things like Credit Karma and other banking apps most of them will utilize Vantage scores. Vantage scores, their criteria weighs differently than compared to your FICO score. So, for example, like your payment history, your credit utilization, if you're utilizing Vantage, some of them weigh heavier than the others in comparison to your FICO. And we have seen firsthand that Vantage scores can actually vary anywhere from 30 to 70 points from your actual FICO score. So be very careful if you're just going off Credit Karma or third-party monitoring systems like Credit Karma. There's a saying that goes, "We believe in karma, just not Credit Karma." So be very careful. And as I mentioned, your FICO score is the one that's most widely used by 90% of your top lenders. And so those are the two different types of scoring models. And with your banking apps and things like that, it'll usually tell you which scoring model they're utilizing. But you do want to be very careful which one you're going off of, especially if you're applying for a car or a credit card, things like that. because it can be misleading. Now, as far as the credit bureaus, so one thing to remember, and a common misconception that a lot of our clients, that we've seen a lot of our clients come with, is that the credit bureaus are not government-owned entities. They are privately owned corporations that collect, store, and use your consumer data to and sell that consumer data to other companies, which is one of the reasons why not every score, or not every credit bureau is going to have the same score. Because again, since they are privately owned companies, creditors, banks, all that, they have to report your data and pay the credit bureaus to report it. So sometimes they're not going to want to pay all 3 credit bureaus to report your data, which is why your scores will start varying from one credit bureau to the other. Some of them might just pay 2 credit bureaus, others might just pay 1. But again, not every single creditor is going to pay all 3 credit bureaus to report your data. But the main thing to come out with on this thing is that they're not government-owned companies. They are privately owned companies who collect, store, and sell your company data, and companies pay them to report that data. Now, one of the things that you can do whenever you do apply for any type of loan or credit card or anything like that, if you would like to not be solicited, there is a website that you can go to called optout.com. If you do it online, it's good for 5 years. If you print out the application, fill it out, and mail it, and do everything by snail mail, it's good for a lifetime, so that you won't be solicited and getting all these pre-approval things. So that's up to you. It's called optout.com. OPTOUT. Now, when it comes to your FICO scoring model, there are 5 factors that determine your credit score. And one thing with credit to remember is that it's like a fingerprint. Everybody's credit is different. Nobody's is the same. Everybody has these 5 factors that affect them, but even within those factors, everybody's variables are different. And then you do have to take into account debt to income ratio. So everybody's credit is like a fingerprint. Now, the biggest factor is your payment history. That's 35% of what makes up your credit score. Have you paid your bills on time? If not, how late were you? How often were you late? A late payment can drop your score anywhere from 30 to 50 points. So it's extremely important that you make all your payments on time. The next one is the amount that you owe, your credit utilization. That's 30%. That determines, or that basically goes into how much credit are you using. Now, ideally, you want to maintain anywhere from 1 to 9% of your credit utilization. So just to kind of give you some numbers, if you've got $1,000 credit limit, you want to keep the monthly balance to less than $100. That's utilizing less than 10%, anywhere from 1 to 9. If you're utilizing anywhere from 1 to 9% or less than 10, it's going to have a positive impact on your credit report. If you're utilizing more than that, it's going to start having a negative impact, which is where a lot of people get confused and a lot of people get in trouble. The common misconception is, well, I've got $1,000. I've used all of it. As long as I make my payments on time, I'm good. That's completely the wrong concept, because you're maintaining high utilization, and high utilization is going to have a negative impact. Now,
And
again,
that's where I am.
and as you mentioned, it does vary. But as long as you, on a monthly basis, try to keep it anywhere from 1 to 9%, you're going to see a huge positive effect. Now, 1 to 9% is ideal. It's not always the easiest to maintain. So what we recommend is maintaining anywhere from 10 to 15%. And you kind of have to think of it like vision. 2020 is ideal. 2030, good enough. So maintaining less than 10% is ideal, but if you can keep it around 10 to 15%, then you're going to see some positive impact. But again, the amount that you owe is the next biggest factor that determines your credit score. The next one, length of credit. So 15% of what makes up your credit score is how long have you had the account. And again, this is another common misconception. So whenever you open an account, you want to keep it open as long as you can. Now, of course, with installment loans, you're eventually going to pay those off, which is the whole idea or the whole point. But as you're paying it off and you're making your payments on time, you're building positive history. And as you are paying, I'm sorry, for the duration of the installment loan, you're building account history so that by the time you finish paying that off, you've built up enough history and enough positive history that when you close the account and pay it off, it won't have too much of a negative effect on you. Because we have seen cases where our clients, finally pay off their mortgage or finally pay off a car loan, and they, of course, they have to close out the account because it's zeroed out, and it doesn't have any kind of negative effect whatsoever. There have been other cases, and that's because they built up enough positive history or positive credit history. But there have been other cases where our clients have, paid off a car and their score dropped immediately 50 points. But that's because, again, either they don't have enough, they're utilizing too much, their payment history wasn't that great. There's a lot of different factors. So it can hurt you, or in some cases not hurt you, just depending on your credit portfolio. But the longer you keep an account open, the more positive history you're going to build. The last two, 10% each, types of credit and new credit. So new credit consists of basically, what are you applying for? How many times have you had your credit pulled? How many inquiries are you inquiring? It's not a huge factor, but it does play a significance in what makes up a credit score. The last one, types of credit. So it's good to have a variety of credit when it comes to your credit portfolio. You want to have a mixture of installment loans, installment credit, open credit, and revolving credit. Installment credit are things like your mortgage, your auto loan, your student loans. Revolving credit, of course, your basic credit cards, and then your open credit. Basically, you pay for what you use, your utilities, and you can get those reported. So those are the 5 main factors that determine your credit score. Now, just to kind of put it in numerical perspective, so out of a possible score of 850, 35% your payment history, have you paid your bills on time, is 297.5 points. That's out of 850, a total score of 850. So 35% is 297.5 points. It's a huge chunk. The next one, 30%, the amount that you owe your credit utilization, 255 points out of 850. And then, of course, types of credit, new credit, 10% each, 85 points. And your credit history, how long have you had the account? 127.5 points for a total of 850 points. Now, if you do have a score of like maybe 560, then you would determine 35% of 560. That would be how much your payment history is having an effect. So again, this is all out of a possible score of 850. Now, these are just some of the most common credit myths that we have come across. The first one, I don't have a lot of accounts, collections, etc., so I'm okay. Not necessarily. In this case, more than likely, you need credit, which is where we also come in. We can help you build credit as well. We'll give you the resources as well as the education to not only build credit, but maintain it as well. So just because you don't have a lot of accounts or collections doesn't necessarily mean you're going to have a good credit report or a high score. In most cases, it probably means you need credit. The second myth, my collections will be falling off after so many years, so it's going to be okay. Technically, there is a time limit as to how long a negative item can be on your credit report. But what happens 99% of the time is when it gets closer to that time limit, your collection will be sold to a third-party collector or debtor who will put the negative account back on your credit report under the third party's name, and then the time frame starts over again. And that can keep happening until either the account's not worth anything or enough time has elapsed. But that could be decades. We have actually recently been seeing a lot of our clients who've had collection accounts since the 1990s. So it can happen. And which is again why you want to make sure that you check your monthly check your credit report on a monthly basis. Just because again, sometimes you might think an account is falling off, but then you find out, well, this Cons account that should have been taken off. Well, it's not Cons anymore. It was bought by Recovery Monitoring Solutions, something like that. So, and they put it back on your credit report. Now, Recovery Monitoring Solutions owes or handles the collection account. So again, just because it's there is technically a time frame, but it can be sold and continue to be put back on your credit report. The next myth is I'm going to be closing out my cards account soon, so my score will go up. As we mentioned in the previous slides, account history makes up for 15%. So just because you're closing an account doesn't necessarily mean that it's going to have a positive effect. And the way that you have to think of it is, again, as I mentioned, with credit bureaus, they are privately owned companies. And just like any private company, they are in the business of making money. So whenever a creditor or bank open an account with them, they start reporting that to the credit bureaus. The credit bureaus see that as you doing business with the credit bureaus. So of course they're going to report your data. You're doing well. It should be a positive account unless you start defaulting on it. Now, whenever you decide to close it to the credit bureaus, they see it as, well, you're not doing business with us anymore, so why should we help you? So what was once a positive account is now a positive item is now a negative item. So it's not always in the best interest to just pay off an account and close it out. In most cases, consistently opening and closing accounts has a huge negative effect, which is why, again, when you open an account, you want to keep it open as long as you can. And then again, also maintain low utilization. The next common credit myth is I'm paying off my debt soon, so it's going to be removed anyway. This is a huge misconception, especially when it comes to settlements. What happens in most cases, 9 out of 10 times, is that collection or that charge off or old account the creditor will change the status from an unpaid collection to a paid collection. But regardless, a collection still a collection, and it's still showing up on your credit report, and it's still having a negative effect. If we are able to help our clients before they settle, what we always recommend and what we will provide is what's called a pay to delete. It's an agreement that you have to have in writing. The creditor or debt collector has to sign it. You have to sign it, but it obligates the creditor to remove your account or remove the account from your credit report once that final payment is made. Otherwise, essentially, you've just paid off a collection and not necessarily wasted your money, but it doesn't help your credit or your credit report or your credit score. So if we are able to help our clients before they settle, we will always make sure that we get them to get a pay to delete, so that we know that when they make that final payment, that negative item is obligated to be removed. So just be very careful with that in case you do get any kind of settlement letters. Make sure to always get a pay to delete. The next one, there's only one score that creditors look at. When it comes to FICO, as I mentioned, there are 16 different FICO templates. So it just all depends on what you're looking at. Each one of them varies slightly in their scoring range, but it's nothing near as FICO compared to Vantage. Between the FICO models, between all 16 FICO models, they can vary anywhere from 15 to 20 points for each model. So it's nothing too crazy, but you do want to be careful as to which FICO model you're looking at. The final myth, the last common myth, is the reason my score is so low is because of my inquiries. This is a huge misconception. As I mentioned in the previous slides, 10% of what makes up your score is inquiries. So to kind of put it in numbers, 10 inquiries is essentially 1 point. So if you've got 30, 40 inquiries, that's not too bad. That essentially translates to about 3-4 points. It only starts becoming an issue when you're consistently applying for things and getting denied. So you definitely don't want to, and especially if your clients are applying for multiple things, and it's showing they have 70, 80, 90 inquiries. Well, that's starting to be 7, 8, 9 points. And that can be the difference between a poor score and a fair score. In those cases, we definitely advise our clients to stop applying for stuff because it's not helping. But those are just some of the common credit myths. Now, there are so right now, FICO, they are utilizing FICO 9 for most, or for a lot of different approval or loans and approvals, but they will be rolling out FICO 10. With FICO 10, there are some new implementations that they are working on. For one, medical collections will no longer have an impact on your credit report, or I'm sorry, on your credit score. And anything under $500 should not even be reported on your on your credit report. Now, at the beginning or at the end of 2022, I believe TransUnion had on their website that they were going to start implementing this in January of 2023. And then when I checked at the beginning of the year, they actually didn't have that anymore. So when this is actually going to be implemented, who knows? So it still might be a little while. Hopefully they'll start implementing this this year. But for now, if you do have any kind of medical collections on your credit report, we do have success in getting those removed. So we can help with that. And again, medical collections should not even be reported regardless because of HIPAA laws. But we can definitely still help with that if you are having some issues. But those are just some of the new updates for the FICO 10 scoring model. Any questions as far as some basic credit knowledge?
I don't know if it falls under basic, but I got a ton of them.
Yes.
First and foremost, so what I see a lot of, and I'm sure everybody else does, is you get a client that comes in that's got some negative stuff on their credit that's, I don't know, 2-3 years old, right? They didn't make a payment. They were 30, 60 days late on 2 credit cards in 2020 because of COVID, right? That's a very common thing that's happening right now.
Right.
How quickly can you either get that removed, get the credit, you know what I mean? Because that sometimes makes the difference between getting the loan or not getting a loan, and or, getting 6% right now versus 9%. Obviously interest rates are really high right now. Is that something you can help with?
Yes. So so with our company, we are licensed and bonded. So we are regulated by the FCRA, which is the Fair Credit Reporting Act, and the CROA, which is the Credit Repair Organizations Act. So everything we do is ethical and legal. Now, when it comes to credit repair, unfortunately, it does have a bad reputation. A lot of people have been burned by them, and there are a lot of shady or unethical credit repair companies. One thing that you have to be very mindful is, and which is a huge red flag, is if a credit repair company tells you, I can get this off in 30 days and the score will jump up 20 points. That is a huge red flag because that is a violation of FTC law or the FTC regulation, because that is not only misleading, but deceptive. When it comes to credit repair, unfortunately, there is no set formula. What we do for one client may not necessarily work for another. And then just as an example, let's say we get a repossession off one client's credit report in 3 months and it goes up 50 points. We could get that same repossession off another client's report, but it takes 6 months and their score only go up 20 points. And that's because, as I mentioned, credit repair is like a fingerprint. Everybody's is different. So everybody's timeline is going to have a different path. So when it comes to actually giving you a specific date as to how long it will take, not only am I legally not allowed to do that, but honestly, we don't know, because when it comes to the algorithms and how much a specific account counts and how many points it can go up or will go up, only the credit bureaus know. So. But on average, with our top plan, on average, most of our clients graduate our top plan in about 4 to 6 months. Some clients graduate in 2, others it takes the entire 6. But on average, most of our clients graduate our top plan in about 4 to 6 months.
what would you say you see as like your average, like what's your average, like this is where we pick people up and this is where we drop them off?
So with most, I'd say about 4 months. So,
Yeah, with credit score wise.
oh,
Do you get a
credit
lot of
score.
people in the fives, you drop them off in the sevens? Like,
Yes. No, good question. Good question. Um, so with on average, a lot of our clients usually hover around 550. By the time they are done, anywhere from 4 to 6 months, we will definitely we can definitely get them to where they can be approved for a loan. Now, it just depends on what type of loan they are approved for. And as you know, with most loans, 620, 620, 680 is where they need to be. Of course, within that range, it determines how much they have to put down, all that. But on average, we can usually get them to at least a 620. If they're around a 550, we can get them to a 620 or above within 4 to 6 months. Now, one thing that we do offer that makes us different from a lot of other credit repair companies, several things. Number one, we do offer with our top plan, we do offer notarized disputes. As far as I know, we're the only credit repair company in San Antonio that offers notarization. My wife, Casey, is a certified notary, so it makes our approach more aggressive, which in turn makes our results more effective and more efficient. It makes our dispute letters more of a demand rather than a request, so we get better results. Now, with our top plan and our top plan only, we do offer a 100-point warranty. So our goal is to increase the client score 100 points in total across the board from all three credit bureaus within 6 months, or we'll give the client 6 months free credit repair. We just like to give our clients a little more peace of mind that there is an action plan. There is a goal, there's a time frame. If we don't meet that goal within that time frame, then we'll continue working on it 6 months free of charge. Just because, as I mentioned, unfortunately with credit repair, it does have a bad reputation. A lot of people have been burned by them. And with most credit repair companies, they'll just sign you up and then string you along for 6 months, 9 months, a year or longer without really any specific goal in sight or seeing very little or no results. So that's why we offer that warranty, just so that our clients know there's a goal and a time frame. And then if we don't meet that, then this is what we'll offer.
so the usual, right? If it's too good to be true, it probably is, right?
Exactly.
If they're saying, yeah, I can write one letter and we'll fix this whole thing, right? Because I know it's a process and it's a
Exactly.
tedious, horrible process. How much does it cost?
So with our top plan, good question. Actually, let me go ahead and just so y'all can take a look at it. And this is actually a good segue into a little bit about who we are and how we operate and what makes us different. So with our company, Universal Recovery Consultants, again, to kind of give you a little background on why we started our company, and I'll make it quick because I know you got to go. So years ago, when we were trying to purchase our first home, we had saved up all our money. We're ready to take that next step and start that next chapter. And then we come to find out that our credit needed some help. And at that time, we're getting referred to all these different people. And like most of our clients, we didn't know much. So we just went with the person that was most recommended. And they were literally charging thousands of dollars just to get started. And at that time, it was really depressing to see all the money we had saved up now go towards credit repair. Now we have to start all over, process take even longer. It was just frustrating. So when we got into credit repair and started seeing how credit repair worked from the inside out, one of the things we noticed was that unfortunately a lot of credit repair companies take advantage of clients' personal financial situation. So one thing that we decided that we weren't going to do was cause our clients any financial stress or be a burden to them. So we've made our pricing a lot more affordable. So with our pricing, let me go ahead and so we do offer 4 different types of plans. With our top plan, it's $300 to start. That's a one-time setup fee and $125 a month. But with all of our plans, we don't do any contracts. You literally go month to month. You can cancel anytime. But again, these are just, and I can send this to if you'd like, and you send me everybody's email, I can send them this digital flyer just so they can take a look at it. But these are our basic plans. From what I understand within San Antonio, most of the more well-known and more established credit repair companies charge anywhere from $500 to $900 just to get started. Like I said, our top plan isn't anywhere near that. and it just goes down from there. But again, we definitely wanted to make sure that we didn't we don't cause our clients any more financial stress or burden, because we've been in that situation ourselves. And one thing about me and my wife that we are very open about is that the fact that we're both in recovery. I'm actually going on 7 years sober. My wife is going on 6 clean and sober. And we've just, through our recovery journey, we've learned that it's not just about being mentally and physically recovered. It's about being financially recovered as well, which is why we named it Universal Recovery Consultants, because it's a universal journey. So, and we've seen firsthand how much credit plays a factor and just moving from one area or one stage of your life to the other. For us, it was going from treatment center to sober living, to apartment, to house, and now to a business. So for us, we're doing everything backwards. And then, the next step is finally marriage, but at least we know we can stand each other. But again, that's just a little bit about our journey and why we do what we do, and why we've tailored some things and what makes us different.
I love it. I love it. So guys, I mean, y'all know the routine, right? Hopefully, sorry, I'm going to shift just a little bit to the way to think of this as a realtor, right? A lot of y'all might be thinking, shit, I need to call Alex personally, right? The problem is with mine, I know exactly what the problem is. I just got to pay some of these bills down. But for your clients, when it comes to your clients, guys, you really got to think through this thing, right? So a lot of people, especially if you're new to the real estate game, you're going to get a client. They're going to, I want to go see this house. You're going to be like, heck yeah, I'm going to go show these properties. Wrong order, guys. 100% wrong order. The first thing out of your mouth needs to be is, have you talked to a loan officer? I don't show anybody properties until they talk to a loan officer. Now, the loan officers that I've recommended before and all that stuff, guys, they will call me afterwards and say, yeah, they're good to go. Here's the number. Hey, I can get them a better number if they shake this out. And then, or they're like, no, they're not going to do it. We got to get them on some sort of recovery plan. We got to get them on, whatever you want to call it. If that's the case, guys, that the next phone call to your client needs to be talking about Alex. Okay. Saying, hey, look, we're not there yet. I think I can get you there in about 6 months. We got to get this whole thing figured out. So why don't you go call Alex? Let's get on the search. Let's do all this stuff. And you're going to save yourself gas and just showing houses in the heat that probably don't have the AC on, right? So that's kind of that's where I see Alex fitting into this entire program, right? Once they talk to a loan officer, if it's a bad conversation afterwards, then they need to come over here. And I really like the fact that it's 1 to 6 months, guys. A lot of people can wrap their head around 6 months. You know what I mean? Especially if it's 1 to 6 months, because if he can do it in 3 to 4, that's even better. Because a lot of people can't think, oh my God, it's going to take me 2 years to fix this. Oh my God, it's going to take me. They're going to get depressed. They're just going to give up on buying a house. Plus, I agree with Alex. I've seen some other credit repair guys that are like, send me $2,000, and it's like, well, for what? Well, I'm going to write some letters. Well, I can write letters, right? It's like I have TikTok. They all tell you to write letters, right? So, if you've got somebody coming in here hitting this thing a little bit harder, you know what I mean? Like negative counts, like legally, like they're making it sound like demands. That sounds pretty good. And plus, it's off your plate. I don't know about y'all. I don't have time to think for anything else. So there's my little pitch towards what Alex is talking about here. And with that, guys, does anybody else have any questions for Alex? I feel like I've monopolized this.
Hey, Alex, this is Deborah Pickett over here in Seguin.
Yes.
I'm glad that you came on here, just because I thought I was like doing really well with my credit. Really excited because I'm trying to buy a house, being self-employed for 2 years, trying to do all the things. And I paid off my car. I paid off my student loans. I have one credit card that I use instead of like my debit card. Well, anyway, I paid off the car, paid off my student loans, and then my credit score went down. And I'm like, what the heck is going on? And then it just kept going down. And then I found out it was the credit card that I was using, because I would pay it off multiple times a month. It has a really low balance, but it was affecting me because they were looking at it only on like what was there the day it was due. So even if I had paid it off like twice that month and then I had racked some more up, I'm using it like a debit card, if that makes sense. It was still my score down, when I thought that was so crazy, because I thought I was being responsible. Does that make sense? And I thought that paying those things off, like made my credit score so much better. It was really frustrating to so it's cool that you're here.
And one thing to remember, especially in that situation, is you want to make note of your payment date and your statement date, or the statement cycle, because what we have noticed and seen from other clients is, they're making their payments on time. They're never late, but their scores aren't improving, and that's because their payment date doesn't fall within the statement cycle. So it's still reporting a high utilization, even though they're paying. If they have $300 limit, they're paying $200 on their payment date, but their billing cycle or statement cycle is not reflecting that because it's not taking that into account. Does that make sense?
Kind of. So like, can we use my situation as an example? So if my payment's due on June 4th, that's my payment date.
Right.
But the payment cycle, what do you mean by that? So when it gets reported to like one of these credit bureaus, or
right, yeah. Look on your
Is that your statement date?
Yeah, exactly. Your statement date. Yeah. So
Yeah, that was kind of where my question is like, so let's say I do pay something off or whatever it is. How long until I see that?
So when it comes to the creditors and lenders reporting your data, they should be reporting. Now, again, they should be doing this. They should be reporting any information, positive or negative, to the credit bureaus every 30 days. That doesn't always happen, which is why sometimes you won't see an inquiry show up on your credit report until 3 months later. And all of a sudden I haven't applied for anything. The last time I applied was 3 months ago. Well, it's because the lenders and creditors aren't reporting that data in a timely manner the way they should be. But when it comes to the statement and payment situation, you want to make sure that you can check your statement cycle or your billing cycle on your credit. I'm sorry, your the thing you get in the mail, your bill. You can see your statement cycle, and you just want to make sure that your payment, or if you do make any payments, it falls within that statement cycle so that they're actually reporting the utilization correctly.
Yeah, so when I spoke to, because it's a Southwest credit card, when I spoke to them on the phone, I was like, I don't understand. I have paid because my balance, my limit is really low, and like I said, I paid off multiple times. So I'm like, I don't understand. Are you guys not reporting this? And they were like, well, you pay on the. They couldn't give me a lot of info, but they were like, so your payment is due on the 4th. So then I'm thinking, okay, I'm using this thing like a debit card. So even if I pay it all off, pay it all off on the 4th. Like on the 5th, I'm already starting to rack up more expenses on it since I use it like a debit card. So if the payment's on the 4th, but they're reporting it, for example, like on the 8th, I mean, is it still going to show a balance? That's what I don't understand. And they're like, well, we can't tell you more. They couldn't really tell me more. I don't know why.
Right. Just for that situation, just check your statement cycle, and whatever the cycle is, make sure that your payment falls within that cycle so that it gets reported the next round.
Alex, this is Susie. I have a question. Well, this is kind of what I'm going through. I'm actually going through a credit repair company to repair my credit because I also want to purchase a home. And the way that it was explained to me, and Deborah, this is so that you kind of know, and I'm not sure if it's super accurate, but the way explained to me is, like, for example, my due date is on the 15th for this credit card that I have. On the 15th of every month, I have to make my full payment, whatever my balance is on there, what I've used on the 15th. And then for me to look at my cycle, which is my billing cycle is, let's say, for example, April 21st through May 21st, they report it on the 21st, which is the end cycle, the end date of the cycle.
Right.
And I have to use at least 1 to 9% of my balance, so that the company can report to the credit, because if you have a zero balance when they report it, apparently that's a negative, and it drops your score anywhere from 15 to 30 points.
Yes. So yeah, because when it comes to credit, so yeah, the credit, the creditors want you to have credit, but very little of it. It's a very fine line. Yeah. So yeah, so you don't want to keep maintaining a zero balance because it's not reporting any utilization.
Yeah.
So you definitely want to make sure to utilize your credit cards, which is a great uh, a great thing to bring up because when it comes to credit, or when it comes to your accounts, if you go too long without any activity and a zero balance, that account will be reported as inactive, and the
Right.
creditor or collector could close it on you without you even knowing. So if you've had that account for 5 or 6 years but go too long without utilizing it, they could just close it on you. And now, what was once a positive account or a positive item now becomes a negative item. So you want to make sure to utilize your accounts, your open accounts, current open accounts, at least once every 3 months, just to show it as active.
And is
Yeah,
this,
I've heard.
is
I've
this
heard always just
accurate,
buy
Alex?
lunch on it.
That if like I was doing the same thing Deborah was doing, I was paying like twice a month. And they told me for me not to even do that, just for me to pay it by my due date. Because either way, I still have to pay it off in full. Is that accurate, or does it matter if we pay double? Because it's not going to affect us in any way, is it?
Right. No, I honestly, I've never heard of, them telling you not to make more than one payment, in situation, and actually what we recommend, yeah, we actually recommend making 2 payments, and because there is what's called the 15-3 hack. So 15 days before your statement date, make the minimum balance. 3 days before your statement date, anything extra, $15, $20, because that is actually going to report 2 payments in 1 month. Now, that is only a good hack to utilize if you have low utilization. Now, if you have a high utilization, that's not really going to help. But if you have low utilization, that 15-3 hack will actually help you and help build more positive credit.
Okay.
So Susie, thanks for what you were saying. And so that's why I think I'm frustrated. So like, let's just say my credit card is like, my credit limit's like $4,000 and I pay it off multiple times a month. So technically you're saying I'm kind of doing the 15-3 hack, like I'm paying it off. But what's happening is by the time the due date comes, I've maybe racked it up again, and that's what's getting like reported.
Exactly. There you go. Exactly. Yep. So it's reporting that high utilization. Yeah.
I'm sorry, say that again.
No, yeah, and you're exactly right. That's exactly what's being reported is the high utilization. Even though you brought it down, what they are because it's bringing back up, like you said at the end of that statement cycle, that's what they're reporting.
That's so frustrating. And then so Susie, what you're saying is like, so if my payment is due on the 4th, then if my statement cycle, for example, ends on like June, if my payment's on June 4th and the statement cycle ends like June 21st, you're saying your advisor told you to have at least 1 to 9% of your credit limit on the card at that point? Is that what you were saying, or did I misunderstand you?
No, that's right. That's right.
Wow. Well, they just made this real complicated for us when we were just trying to make it
and
simple.
yeah, unfortunately,
Like,
credit it is a very in-depth thing. Yeah, it's which is why credit's like a fingerprint. Everybody's is different, and it's just it's crazy how complicated it can get.
yeah, that's wild. And again, I didn't get any positive points for paying off those things completely, which I thought I would, which it blows my mind. But this has been really helpful information. I'm very glad you're here. Thank you so much.
No problem. And one thing that we do offer is free consultations and credit analysis. So if you do have any clients that might need help qualifying, we do offer free consultations and credit analysis.
Eric, I've got a question for you. You mentioned that Credit Karma, and I normally do this with my clients. A lot of them normally use Credit Karma.
Right.
And I usually tell them, don't go by Credit Karma, because when you think that you don't qualify, I get you qualified. But is there a site or something that you recommend, an application rather than Credit Karma? Because obviously Credit Karma, they're great at advertising.
Right.
But do you have any like system or somewhere where you can kind of send your potential
Yes.
client to a site or something to kind of
Yes.
see, hey, this is what you should look into rather than Credit Karma?
Yes, no, great question. So there are actually two different sites that you can request a one-time copy of your credit report. You can go to annualcreditreport.com, or you can also go to myfico.com. They'll give you a one-time copy of your credit report, and it's your actual FICO credit report. So that's annualcreditreport.com or myfico.com, and it'll be you can get it for all three credit bureaus.
Thank you.
Yeah, I signed up. I think I pay that's $16 a month or whatever it is for Experian, so I can track it daily.
Right. Yeah, and I
But
do believe Experian uses Vantage scores as well, if I'm not mistaken.
yeah, just because I buy so many property, you know what I mean? It's like I need to know
Right,
from one day
right.
to the next, and it's kind
So
of a
one of the-
stupid expense, but
And one of the things, so with our system, we utilize one of the top rated credit monitoring systems in the US. Is called MyScoreIQ. The reason why we utilize it, because there are different ones that some credit companies use, like Identity IQ. But what we found out was that other monitoring systems that are popular, that a lot of credit repair companies utilize, still give you your Vantage scores. With MyScoreIQ, it's a representation of your FICO score 8 model, which is why we utilize it. Now, it is a little more, with our system and with our process, we do require that all our clients maintain that third-party monitoring system. It's a separate charge from our services. It's $32.99 a month, but they only need to maintain the monitoring system just for the duration of the credit repair. Once the credit repair is complete, they can cancel that service. But a lot of our clients do like to maintain it and keep it, because it is not only one of the top rated monitoring systems, but it also gives them their actual FICO score 8 model rather than their Vantage scores. And with most credit repair companies who utilize other systems like Identity IQ or Free Score now, I believe is another one's called, it's a little cheaper on the client side. I think it's like $23.99 a month. Ours is $32.99 a month, but we do feel that that the value is there because what we are giving them is a representation of their FICO score, not their Vantage score.
So what credit report is more often used, the TransUnion, Equifax, or Experian?
So as far as I know, with lenders, they utilize the middle score. So whatever the middle score is what they go with.
So Equifax?
Well, no,
well,
so
it varies.
Yeah,
Oh,
exactly.
okay.
Yeah. It's just whatever score is in the middle. Yeah.
Susie, my lender ran all three, and then, like he said, chose the middle one.
Okay, yeah, because I utilize the checkyourcreditreports.com.
Oh, okay.
And that's because that's the company that I'm utilizing. That's what they have me on. And I always get confused because I have TransUnion, Equifax, and Experian, and of course TransUnion is way higher than the other ones. And I guess I don't understand why they're so different if it's just me, you know what I mean? Like my credit score.
Well, as I mentioned, the reason why is because probably some accounts are not being reported to all three credit bureaus. Because remember, it's the creditors and lenders, they have to pay the credit bureaus to report your data. So they might not want to pay all three credit bureaus because that can get pretty expensive. And that's why your scores will start. That's where your scores will start varying, because you might just see, let's say you have a Target card, and this is just an example. Let's say you have a Target card, but it's only being reported on Experian and TransUnion and not Equifax, because they don't want to pay Equifax to report that data.
I see. Okay.
I feel like credit is such a scam. We've all been scammed.
So I've actually been doing some credit series classes these past few weeks, and one of them that we actually got into was credit regulation and credit repair organization regulation as well. But, you know, it did bring up the good point of, you know, when it comes to credit monitoring, there are only 3 credit bureaus in the US that monitor millions of consumers' credit and data and all that. So you kind of have to wonder, how efficient are they? And then at the same time, you know, if only 3 bureaus are monitoring millions of people's credit data, you know, how is it that, you know, like, why, I don't know, it's just, it just kind of brings up a lot of questions. But
Deborah,
Deborah,
you're right. You're right.
Yeah.
It's an absolute racket. It's an absolute racket, but it's the best we got, and that's what
Right,
everybody's
exactly,
using.
yeah.
It just seems
So-
like, even just when I was calling my Southwest people customer service and they couldn't give me info, it's almost like they want you to not be in good credit standing. Like, the information should be out there. If this is the rule, we all, like, you know, the standard we all have to follow. It's weird to me. It just seems shady.
But you would think that same thing about paying your taxes. They don't ever tell you anything about that either.
Right,
oh my gosh,
exactly.
I agree with you.
And
Like, they should
And if
teach
you
you
get that wrong, you go to jail.
Right.
Yeah. Or get a big bill.
Right. Hey, I gotta go. Y'all finish talking.
Yeah. If you have any other questions, definitely scan our QR code. It'll take you directly to our website. Now, one thing I did forget to mention is that we do offer an affiliate program. So with our affiliate program, we do offer incentives. Number one, for every lead that you send us who becomes an active client, we'll pay you out $35. After 3, we will actually work on your credit for free if you'd like, in addition to the continued $35. Now, the other thing that also makes us different, and is Susie still on? I also wanted to just see.
I'm on.
Okay. So one of the things that we do offer, and that makes us different is, so with credit repair, unfortunately, as I mentioned, it does have a bad reputation. We take a lot of pride in providing quality client service, and we do that through communication and affordability. With communication, we do it in 3 ways. Number one, as our clients' accounts are being disputed, our clients get an email from our company about every 8 to 10 days, giving them credit tips, credit education, letting them know where they're at in the process, as well as what to expect, and when it's time to schedule what we call an MCR, which is a monthly credit report. So in addition to the emails, the second thing that we do to provide consistent communication is once a month, whenever our client's round is complete, we will schedule an appointment with them and go over everything that happened that round. We'll let them know exactly what we were able to remove, what we need to work on, what's currently in dispute, let them know of anything new that's popped up, and then based on their updated credit report, give them the plan of action for the next set of rounds, and then the process starts over again. The third thing that we do for our clients in order to provide consistent communication, in addition to the emails and the monthly credit report call, is with all of our clients, no matter what plan they're on, every single client receives their own client portal. So they can actually log into our system and see everything that we're working on. They can see the letters that we've created, see the accounts that we're disputing, and see their scores from month to month. It's also another way for them to communicate with us because they can send us messages through their client portal as well. Those are the 3 things that we do to provide consistent communication and quality client service, because when it comes to credit repair, unfortunately, the biggest complaint that a lot of clients and affiliates have is lack of communication. With clients, their biggest issue is, I don't hear from my credit repair company until I miss a payment. And then it's, well, what have you been doing the past 6 months? I haven't heard anything and I haven't seen any results. So that's why we offer the emails, the monthly credit report call, and the client portal. Now with our affiliates, just like the clients have their own client portal, with our affiliates, they have their own affiliate portal. So they can actually log into our system and see everybody that they have sent us for that month. And they can see where they're at. The other thing that we do that no other credit repair company does, as far as I know, is just like the clients have their monthly credit report call, for our affiliates, we do what we call an ARU, which is an affiliate report update. So we will actually, on the 15th of every month, we send out a detailed report of everybody that's in the affiliate system. So we will actually break down every client, as you can see right here. And Casey does this actually. She breaks down every single affiliate and their referrals, let you know if they're a lead, how many times we contacted them, what the response was, if there was a response, And then if they're a client, where they're at in the process, what round they're at, what their scores are from month to month, and let you know of any issues that have come up. Because when it comes to credit repair, it is a team effort. You know, we can only tell them so many times, hey, you know, you're making late payments, you're adding more collections, you're maintaining high utilization. But we also like to let our realtors and loan officers know the same issues as well, because again, it is a team effort, and it also might help to hear our clients to hear that from another person on their team who's trying to get them to the same end goal. So if their lender or their realtor is also letting them know, hey, if you want to get in that house by the end of this year, you need to stop making late payments. So that's why we always that's why we send them all our affiliates a detailed report of everybody that they've sent us. As you can see right here, how detailed it is. And this is all Casey, so I have to give her props on that. But we have been getting a lot of great response because of this specific report for our affiliates. It's something that no other credit repair company does. The other thing is, as you can see, we are big on communication. So with our clients, as I mentioned, we have the capability with our system to not only create email campaigns, but keep track of them as well. And again, we're able to add, take away if we need to add anything, but we do have the capability for every round to send out an email campaign to all our clients to ensure that that our communication remains consistent. And this is just kind of what their client portal looks like. So they can actually see the accounts that we're disputing, and then this is what they'll see on there, and their scores. There's how they are from month to month, what accounts we're disputing, or how many accounts we're disputing, how many are removed, how many are positive. So it gives a very detailed account. Now, one of the things that I also should have put on here was we also send them a progress report. So our clients, we actually create or generate every month a progress report detailing everything that happened that round, and we send that to them as well when we conduct the monthly credit report call.
I had a question for you on regards to, I had a past client that everybody kept on giving him different information on regards to like charge offs on their credit. And I'm not too familiar with this. So is that something that is kind of like just kind of closed out in general, or does linger on their credit for X amount of time? I mean,
no, that's a good question. So when it comes to charge offs, so a charge off is a negative item, but now when it comes to collections and debts, the client legally still owes the debt. So we are never going to tell them, you know, don't pay their bills. That's just not only unethical, but we just don't do that because legally the client still owes the debt. Now, we are working right now. We're vetting out some possible partners, certified financial advisors who will actually be resources to our company for our clients in order to help them either consolidate the debt or just help with debt, getting rid of the debt completely, so that not only are they free of the debt, but now their credit is also clean. But again, as far as their credit report, we can work to get any negative, inaccurate, or out of date item on their credit report, so that they can move forward with their home purchase or auto loan or whatever. Again, we work to clean up their credit report in order to improve their credit score. But as far as the actual collection or debt that is on their credit report, that is still legally owed. But we actually are working on resources to help them just be completely debt free and credit restored and improved.
That's good. Thank you.
Any other questions? Well, I do appreciate y'all's time. Yeah, no, I'm sorry. Was there any other question?
Man.
Yeah, yeah, no, I
And by the
appreciate
way, I
it.
didn't recognize you because you didn't have your hat on, but yeah,
Oh.
I do remember you.
I was just trying something different.
Uh,
But we definitely love supporting all our partners and affiliates. So if y'all ever do have any lunch and learns or any first time home buyer seminars, or just need help at open houses, we definitely would love to support. Let us know. We'd be happy to stop by, just be present, keep you company, or provide refreshments, whatever y'all need. So we're all about supporting our partners and affiliates. And yeah, if y'all ever need anything, let us know. If y'all'd like to team up and do any kind of first time homebuyer seminars or presentations, we'd be happy to help. But if you have any other questions, definitely take down our information, scan our QR code, go to our website, our Facebook. There's lots of good things there.
Thank you, Alex. Appreciate it. You have a good one.
Thank you, guys. I do appreciate it. Yeah, look forward to working with y'all. And yeah, if y'all would like to be a part of our affiliate program, just send me name and email and phone number, and I can send you a link. It doesn't cost you anything. But yeah, in case you ever do have any clients that might need help qualifying, you just go to your portal, upload the basic information. We get a notification, and then we can try to reach out to them within 24 hours to set up a consultation.
Sounds good.
Thank you, Alex. I appreciate it. This is Susie again. I'll be in touch with you.
Okay, no worries, no worries. I appreciate
Thank
it.
you.
Yeah. All right, y'all have a great day.
You too.